All right, let's dive in. Ever wonder how the pros seem to know what's really happening inside a company way before it ever hits the headlines? Well, a huge piece of that puzzle is knowing how to decode financial conference calls. So today, we're going to open up the professional's playbook and show you exactly how they turn these calls into some seriously powerful insights. And this, right here, is the absolute truth you have to start with. The official reports, sure, they give you the clean numbers. But the conference call? That's where you get the real story, the subtext, the warning signs. Your job is to read between the lines because, believe me, the most important information is almost always what they don't say directly. So here's our roadmap. First, we'll talk about why these calls are such a goldmine in the first place. Then, we'll get you set up with a pre-call game plan. After that, we'll tune in to what the pros are listening for, learn how to decode those hidden messages, and finally, we'll wrap it all up with the pro-level analysis framework. Okay, so first things first. Why is this 1 hour every 3 months considered such an incredible goldmine? Especially when you're looking at a bank or some other financial company. I mean, really? Why not just read the glossy annual report and call it a day? What makes this live, often unscripted Q&A session so important? It's because these calls give you something the numbers never can. Context. You can literally hear the confidence or, the hesitation in a CEO's voice. A tiny shift in how they talk about asset quality today could be a massive signal about bad loans that won't show up on the balance sheet for months. And in a business like banking, which is built, entirely on trust, hearing that tone, well, it's everything. So, how do you actually capture all this amazing insight? Well, it all starts before the call even begins. Look, the best analysts don't just wander in and listen. They prepare. Your success is pretty much decided by the homework you do before anyone even says hello. Here's your 4-step game plan. First up, go back and review last quarter's call. What did they say they were going to do? That's your baseline. Second, you got to dig into the new financial results that just came out. Where are the surprises? What doesn't add up? Third, get the bigger picture. Is this an industry-wide headache or is this a them problem? And finally, get a simple scorecard ready. You need to know exactly what you're listening for before you jump on. All right, you're prepared. You've got your scorecard ready to go. The call kicks off. So what are the critical signals you should be tuning into amongst all that corporate jargon? The pros really focus on 4 main pillars. The first is asset quality. You're listening to their tone when they talk about NPAs, that's non-performing assets, basically bad loans. Second, growth strategy. Where are they saying growth is actually going to come from? Is it realistic? Third, profitability. You're zeroing in on the net interest margin, or NIM. That's the spread between what a bank earns on its loans versus what it pays out on deposits. Is that spread getting squeezed? And finally, regulatory stuff. How are they talking about capital and risk? And this brings us to the true art form of call analysis. This is interpretation. It's where we learn to separate what is being said from what is actually being meant. And right here is where it all becomes crystal clear. Just listen for the difference. On one side, you've got the red flags. Defensive language, vague answers, blaming competitive intensity for poor results. It's all smoke and mirrors. But on the other side, the positive signals are the exact opposite. They're giving you specific, numbered guidance. They're proactively telling you about a challenge, and more importantly, their plan to fix it. That shows strength, not weakness. That's the contrast you're listening for. Let me give you a classic example. When you hear a phrase like temporary headwinds, and they don't give you any specifics on what they are or how long they'll last, that's a massive red flag. It's a classic bit of corporate speak that's designed to sound harmless, but it should be a trigger for you to start digging much, much deeper. So, the call is over. Your head is probably swimming with information. But hold on, your job is not done. The last and most critical step is to take all those raw notes and sharpen them into a real, actionable insight. And this is the pros routine. You use a template for your notes, so you're always consistent. Then, you actually score management's credibility. Did they do what they said they would last quarter? Yes or no? Pay close attention to the questions other analysts are asking. If 3 people ask about the same thing, that's a huge signal of market concern. And then, the most important part. Within 24 hours, you have to synthesize it all. Force yourself to answer one simple question. How has this call changed what I think about this company?
Now, for the real secret weapon, the one technique that separates the pros from everybody else. Once a year, sit down and listen to the last 4, maybe even 8 conference calls back to back. I'm telling you, this is an absolute game changer. It exposes the recurring excuses, the long-term patterns, the inconsistencies in their story that are completely invisible when you only listen to one call at a time. It is the ultimate credibility check.
So, there you have it, the complete professional's playbook, from prep all the way to the post-call synthesis. You know how to spot the gold mine, you know how to decode the language, and you know how to see the patterns. So, the only question left is, whose call are you going to analyze first?